In today's session, we'll be covering the inflation report and we're looking at the dollar index and stocks and how they're performing. At the moment, we've seen that a lot of stocks have gone up and the dollar index has also been heading downwards because of the expectations in the market. My name is Samson Muzera and welcome to this episode of the Market Watch series where we talk about the charts, the news and what to expect. So remember to subscribe and like and share for more. So we've seen broad dollar weakness across the board, and this is to that expectation that has been coming along that we're going to see a cut in September. However, it's now we have to take it a bit more technically, but before we get there, we've also seen the Nasdaq, for example, bouncing back off from that rally last week. Remember last week we discussed how we don't think that we are in a market crash or stocks are coming down because of the health of the US economy. So you're seeing that sort of bounce back along that trend, and it seems as though we might continue higher. In the moment, we're also seeing, for example, in Euro USD, where you're approaching that key level at the resistance level, and the market is a bit cooled off for now because you're anticipating news. But broadly, we have seen signs in line with what is an interest rate cut. However, today we have the CPI reading, and yesterday we had the PPI reading, which also confirmed that there is a possibility of a cut. But then today we have this CPI reading and we're expecting a slight increase in inflation. Now, investors are already certain that we'll have a cut in September. So that's out of the question. What we are looking at is the aggressiveness of this cut. So will you have a 25 basis point cut or 0.25% cut, or will you have a 50 basis point cut? Now that's what investors are contesting, because if we have a higher inflation at the moment, it might lean or it might make investors anticipate that we will not be as aggressive as we once thought we'll be with cuts. That is, we might have maybe a slightly smaller cut, which is 0.25%, and that might not really weaken the dollar aggressively. However, if today's reading comes in lower than expected, then that is consistent with what we have been seeing for the past 3 weeks, from the NFP report to the PPI report and now the CPI report. And that thought process is the US economy is cooling down, and there is signs that the Fed needs to start acting very aggressively. And if that is the case, then we might start anticipating even a 50 basis point hike, and that might lead to that aggressiveness in the dollar weakness. So if you look at something like the Euro USD, that level, that critical level that we've approached, might have some reason to be broken through, and we might see the Euro USD pair, for example, chug higher and higher. And the same thing if you look at the dollar index as it is approaching a key support level. If indeed we have a very terrible reading today in terms of inflation, then that will give investors the confidence to anticipate a 50 basis point hike, a 50 basis point cut, instead of a 25 basis point cut. And that might lead to that downwards momentum in the DXY. The same thing applies with Nasdaq. At the moment, every trade or every pair is looking to be trading in line with correlations. For example, in the Nasdaq, if we had expectations of an aggressive cut rise, then we might see that uptrend continue. And for the dollar index, if we have the expectations of a cut rise, then we might see that downward trend continue. If you look at gold, for instance, we've approached that critical resistance level. And today's reading is crucial to know whether we'll be going higher aggressively or higher less aggressively. Take note of that imbalance level that we have around that region. And this might be cause for some downwards movement in gold. However, if things stay as is, considering also the tensions that we're observing in the Middle East, then it might be reasons to believe that we might see gold chug along higher. However, that is still to remain in question depending on today's inflation report. Remember, this is the last important data point before the next meeting. Yeah, and we have, of course, other data points coming in, but these two are largely what we're observing from last month's data. And that's the last data point, I think, before the Fed starts considering any sort of cut or any sort of action and how aggressive that action is going to be. So be sure to watch out for those levels. The other key pair we're looking at and we've been observing is the USD JPY pair. Now remember, for this pair, there are two things that are causing it to move in a downtrend. The first one is the expectation of tightness from the BOJ, which is going to make the yen more valuable. And the other one is the expectation of looseness in terms of policy from the Fed, and that is going to make the dollar weaker. So that combination is what is leading to that downtrend. And today's meeting, today's CPI report, is going to be crucial in determining how aggressive that downtrend is going to be. Yes, we're in a downtrend. We've cooled off right now, but if we see the inflation report coming in really low, which is in line with other readings that have been showing signs of a weaker US economy, then that is reason to believe that this downtrend is going to continue more aggressively. And having said that, we are expecting the reading to come in a few hours, so stay in touch and be on the lookout for that. We will be updating on our Twitter page or on any of our socials as to how that reading goes and how the market is interpreting it. Having said that, thank you for tuning in to this session of the Market Watch series. If you want to trade any of these instruments, the link is in the description, and catch you in the next one.